In a dramatic escalation of tensions shaking the financial world, President Donald Trump has unleashed a blistering attack on Federal Reserve Chair Jerome Powell, declaring that Powell's termination cannot come fast enough. The fiery remarks, posted on Trump's Truth Social platform on Thursday, April 17, 2025, come amid a heated dispute over interest rates and the economic fallout from Trump's aggressive tariff policies. The clash has sent shockwaves through Wall Street, reignited debates about the Federal Reserve's independence, and raised fears of a looming recession. Here's the full story on this high-stakes showdown that could reshape the U.S. economy. Trump's latest outburst targeted Powell's refusal to slash interest rates, a move the president insists is long overdue. The ECB is expected to cut interest rates for the seventh time, and yet, too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical, complete mess. Trump wrote. He pointed to falling oil and grocery prices, claiming the U.S. is getting rich on tariffs, and urged Powell to follow the European Central Bank's lead, which lowered its key rate from 2.5% to 2.25% on the same day. Trump's rhetoric, laced with personal insults, underscores his frustration with the Fed's cautious approach as the economy grapples with the ripple effects of his trade policies. The feud intensified following Powell's speech at the Economic Club of Chicago on Wednesday, where he warned that Trump's sweeping tariffs, described as significantly larger than anticipated, are highly likely to fuel inflation and slow economic growth. Powell signaled the Fed would hold its benchmark interest rate steady at 4.25% to 4.5%, unchanged since December 2024, until the impact of Trump's policies becomes clearer. We are well positioned to wait for greater clarity, Powell said, emphasizing the Fed's dual mandate to stabilize prices and maximize employment. His remarks, which suggested a focus on curbing inflation over spurring growth, contributed to a stock market slide, with investors rattled by the prospect of stagflation, a toxic mix of stagnant growth and rising prices. Trump's tariffs, rolled out on April 2, 2025, imposed a blanket 10% tax on imports from most countries, with a staggering 145% hike on Chinese goods, alongside levies on Canada, Mexico, autos, steel, and aluminum. The abrupt policy shift sparked a financial market backlash, prompting Trump to announce a 90-day pause for negotiations, though the China tariffs remain in place. Economists, including those at Goldman Sachs, have raised recession odds, citing increased costs for consumers. The Budget Lab at Yale University estimates the tariffs could cost the average U.S. household $4,900 annually due to higher prices. Powell highlighted a sharp decline in consumer and business sentiment, driven by tariff-related fears, warning of a challenging scenario where the Fed may face tough choices between fighting inflation and supporting jobs. The president's call for Powell's termination has reignited concerns about the Fed's independence, a cornerstone of its credibility in global markets. Powell, initially nominated by Trump in 2017 and reappointed by President Joe Biden in 2022, has steadfastly defended the Fed's autonomy. "Our independence is a matter of law," he said in Chicago. "We're not removable except for cause." Powell's term as chair runs until May 2026, and he has made clear he would not resign if asked. However, a pending Supreme Court case could upend this dynamic. The case, stemming from Trump's earlier firings of officials at independent agencies, may determine whether presidents can dismiss heads of agencies like the federal. A ruling expected this summer could grant Trump unprecedented power, a prospect analyst Krishna Guha of Evercore ISI warns could trigger a loss of Fed independence trade, with catastrophic market consequences. Trump's own economic team appears divided. Treasury Secretary Scott Bessent has reportedly cautioned against firing Powell, warning it could destabilize markets, according to Politico. Yet Trump's top economic advisor, Kevin Hassett, recently downplayed concerns about political pressure on the Fed, claiming there would be no political coercion. Trump's history with Powell is fraught. During his first term, he repeatedly criticized the Fed chair for not easing policy aggressively enough, even musing about firing him. In a 2024 Bloomberg News interview, Trump suggested he would let Powell serve out his term, but his latest remarks cast doubt on that commitment. The broader economic context adds urgency to the clash. Despite low unemployment and inflation nearing the Fed's 2% target, Trump's tariffs have introduced volatility. International Monetary Fund Managing Director Kristalina Georgieva warned that the global outlook is weakening due to the Trump tariff onslaught, urging central banks to remain agile. Billionaire investor Ray Dalio has suggested the U.S. economy may already be in or near a recession. Consumers, meanwhile, are growing pessimistic, with surveys reflecting fears of job losses and soaring prices as tariff costs hit households. Powell remains resolute, insisting the Fed's decisions will prioritize the public good over political pressure. "That's the only thing we're ever going to do," he said, brushing off Trump's attacks. But with the Supreme Court case looming and Trump's tariff agenda intensifying, the Fed faces uncharted waters. The risk of stagflation could force Powell into a delicate balancing act, potentially delaying rate cuts and prolonging economic strain. For Trump, blaming Powell may serve as a convenient deflection from the fallout of his own policies, but it risks further eroding confidence in the Fed's independence, a move that could haunt markets and consumers alike. As this saga unfolds, the stakes couldn't be higher. Will Trump's pressure campaign bend the Fed to his will, or will Powell hold the line? With the economy teetering and a legal battle that could redefine presidential power, the world is watching.